Everybody, welcome to another episode of the ConsumerFi podcast. I'm pleased to be joined today by Steve Craig of Socure. Steve, welcome to the pod.
Hey, thank you, Joel. It's great to be here.
So Steve and I met a couple years ago when we were in the first year of kicking off Fraud Friday for the National Automotive Finance Association. And Steve is somebody who is an expert and a leader in the field, who was gracious enough to come and join us and really help crack open the topic and talk about a number of fraud schemes and other things that as lenders, and this was specific to non-prime automotive, which is an interesting place where a lot of fraud can be perpetrated, to be honest. And so, Steve, we met back then and you kind of enlightened us. Do you want to tell us a little bit of your background? And then we definitely want to dive into Socure and what you're up to today.
Yeah, I'd love to. Thanks for having me on the podcast, Joel. This is amazing what you've built here. I've been listening to the show for some time, so it's great to be a guest on it. So my name is Steve Craig, and I'm with Socure. I've been with Socure just a few months, but I've been in the identity verification industry for about 6 years. I've been in the financial services tech space for a long time. I was actually a loan officer many years ago. I don't know if I told you that, Joel. I used to process loans for banks and credit unions across the country.
I didn't know that. Is that where you figured out? Is that where you figured out how fraud works?
Well, I worked in a call center while I was in college, and we processed loans for smaller credit unions and banks. And I was the person that answered the phone. Hey, this is Steve. What type of loan would you like to apply for? And so I help people through their consumer lending process. But yeah, that was my first exposure to fraud because we were in a call center. We weren't allowed to question the person on the other side of the phone if it seemed off. If they had the information, if they had the social, if they had all the details we needed, we took the app. We didn't challenge them if things didn't sound right. So that was my first foray. But I've been in the industry for a while. Mostly worked in internet companies. And when I joined the identity verification space, I was blown away by how much fraud activity was occurring. First, it was with credit card applications, really, and card not present. And then as more and more moved online, once we saw EMV come in, when that became more of a standard, you started to see fraud that had been out in the physical world move online. Fraudsters got to eat too. And so that concept of really making sure you're dealing with the consumer on the other side of the mobile phone or on the website became really important. So I've been working with clients for years on that, building solutions, roadmap development, making sure that we've got the right tech in place. And now I'm at Socure, which is just a rocket ship of a company right now that solves these problems in great detail. So I'm really excited to be with Socure.
When we think back to the origin and the genesis of fraud, you talked about some of the card not present, obviously some of the income and employment things that are stated items, right? And then it's really on the lender to do all the homework to try to figure out, does this actually match with an individual that may be receiving legitimate employment income earnings, but it's, maybe they're a landscaper. And so they get paid really in cash or, other customer direct kind of payments. And it's very hard for us to audit because these people may not have be heavily banked. But so when I think back to the kind of origins and the genesis within auto, and you mentioned mortgage, which I think is probably very similar. What were the big, you mentioned card not present, but what were some of the other big things that we were seeing in fraud back, say 10 years ago?
Yeah. Well, if you look back in time, like 10 years ago, the standard for proving identity in many of these digital channels was this process of knowledge-based authentication. These are the questions that we all know and love about our financial history. What was your mortgage payment 5 years ago, or what street did you live on, or what was this payment or that? And I think for a while that worked because those details were sensitive. I mean, they weren't secret, but they were private to the individual. But we started to see more and more credit breaches, credit data breaches, to the point where this information was out there and available for fraudsters to say, hey, I'm going to pretend to be Joel. I have all of his information. I'm going to go ahead and just answer these questions and get through the process. So this process of impersonation was rampant, and many companies popped up to solve that problem. think the biggest was LifeLock. I recall the founder and CEO put his social security number in ads. He stopped doing that after a while, but very, very bold in the claims like, look, impersonation can be thwarted. So we started to see shifts of away from KBA as more data became available for the fraudsters to perpetrate that. And then as more mobile activity increased, as the iPhones and the different smartphones proliferated, we saw more mobile activity rather than in-branch applications. So it was just more opportunity to commit impersonation. But that started to shift. Impersonation, and there's certainly a lot of that out there. That's the third-party fraud, but we're starting to see more unique fraud types coming up.
Yeah, I remember that was a hot topic back in the day about how the cell phone, right? The cell phone hit a point of importance where now I think you have to scratch your head if somebody said, would you rather lose your wallet or your cell phone? Which would you rather lose? Especially if you were like on travel somewhere, right? Like, I don't know. I tend to take photos of important documents if I'm on travel just as a backup, and having it on your phone is really helpful.
Yeah.
But you kind of walked us through the story, Steve, and I want to tie this in with what Socure is doing, nowadays. But what are some of the elements of fraud that you're seeing now? In particular, I mean, you think about what happened with COVID, with a large preponderance of companies having to figure out how to work in a distributed fashion. Obviously, you're not having customers come into the branches so you can look them in the eye. What has fraud then? At least my understanding of it is the fraudsters are smart. If you close one door, they'll go and open another one. And maybe you can tell us a little bit about what you guys have been seeing along those lines.
Yeah, and I can give you a little bit more about what I've been seeing the last few years. So as KBA has been challenging as an identity proofing process, the industry has looked to alternatives. And if you think about the classical, like how do you have strong customer authentication? It's typically what you know, what you have, and who you are. And the what you know is, okay, if you have established a relationship, you have passwords. Well, we continue to use passwords as our primary point of future authentication. But if you don't have that pre-established relationship, that's where KBA came in. That's where you have knowledge-based questions. So you can prove, okay, Joel knows this information. But because that is no longer a great method, they've looked to other ways. So if you look at what you have and who you are, this is where the beginning of identity document-based verification started. This is, hey, you've got a government-issued credential in your wallet. You can bring that to your mobile camera. You take a picture of it. And then if you want to match that up to who you are, you take a selfie, you do a biometric scan of that, you ensure that it's a live present person, and you do that comparison. But fraudsters have gotten hip to that. And the ability to manufacture government issued documents without it being from the government, like the specifications that you get from the DMV, you're able to do that in this ecosystem currently by going on nefarious websites and putting in details, and you're getting equipment bought in these countries that maybe turn the other eye when it comes to who has access to them. And they're printing identity documents that look exactly like the identity documents you or I would get officially. And then they're even as bold as to put their face on the document. They're in another country. They don't care. They're maybe doing a VPN in to get access. And they pass through those additional gates that have been put on. So that's become more and more challenging. Now you have the what you have and who you are. But if you can get past that, like what is left? And that's what really drew me to Socure, is you need to take a holistic, multidimensional view of someone's identity. So as an example, just because I have an ID and I have my face and it matches the document, what are the other digital trails? What's your digital DNA that exists out in the ecosystem to be able to link those pieces back? And so that's really the direction that the industry is going, is multiple data points, not just the one, not just the identity document in the face.
We haven't talked about this at all, but it's just what you got me talking about with this kind of digital fingerprint, if you will, with when you compile this information together. You may or may not know anything about this, but when I hear that, I think about the power of like a blockchain address, where it can be very unique, very difficult to break it down. And it can be your kind of personal fingerprint, if you will. I mean, Are you aware of anybody doing anything with blockchain type technology to increase our ability to credential people, or am
Yeah.
I just kind of thinking, on Mars? I belong with Elon Musk and his little space.
No, no, there's actually like really since the beginning of the crypto craze and Bitcoin and all of these blockchain use cases, there has been a dialogue around the use of a blockchain in identity because you can essentially track back those transactions. You can establish trust. You can decentralize it. There are many companies in the space that are leveraging that technology, but I mean, there's some weaknesses to it in the context of identity. Some are related to privacy. Some are related to transactional speed. There's certainly a cost element to it. Most of the ecosystem currently is rather centralized by the let's say you're a bank and you're trying to verify identities. You're still looking to keep that information within your ecosystem. You may not want another competing bank to have the same exact identity information that is portable. And so there's an element of competitiveness. But at the same time, the banks have realized, at least when it comes to sharing outcomes, fraud details, that there's power in the consortium. But as far as blockchain, I think we'll see some emergence there, but it's not an area that I've really focused on myself in recent years.
So to bring it, this is a great segue. So to bring it to a point of, some of the things that you're working on now. We talked before recording a little bit about credit washing. Some of the other things like what are the types of problems specifically that Socure is solving, and help people understand like how you go about doing it and how people use your
Yeah. Well, let me go a little bit deeper into Socure. For those that are listening, Socure is a venture-backed company. It's been around almost 10 years. Recently raised about $100 million on a Series D, $1.3 billion valuation. So well-established company. And Socure's differentiation in the market is to take a holistic view of identity, to not just depend on a singular signal. So when it comes to auto finance or credit card issuance, or even getting a DDA account or checking account, there's a series of steps you need to go through in the identity lifecycle to make sure that you're working with the person that you think you are. And many lenders have for a long time thought about credit risk. Like credit risk is central to lending risk. And that includes, can this person pay the loan? Do they have the character, capacity, the 5 C's? I forgot them all, but there's important elements there. Often identity is thought of as a stipulation or a condition. Okay, subject to getting this loan, you have to prove who you are. But what we're saying is identity risk and credit risk are two different things. And if you address identity risk sooner in the process, it's going to improve your credit quality long-term, but it's also going to save you from fraud losses. It's going to save you from trying to go down a very expensive process only to find you get to the end and you can't prove out the person, or you have to take a questionable leap of faith. And so what we're doing at Socure is we're ensuring that along the journey, all through a single platform, lenders, especially those doing auto lending, can use the right level of verification when it's most appropriate. So as an example, process of KYC, know your customer. Let's make sure that this person exists. The status quo for that a lot of times is soft inquiry, or maybe it's the KBA or it's some other means where you're just establishing that this person exists using the credit file. But you're actually cutting off a lot of people who are either new to credit or are just getting established, might be new to country. So when you think about, does this person exist? You need to take a multidimensional view there. So is the name, address, date of birth, email, phone number, do these things exist out in the ecosystem? And can you prove that, yes, this person exists? So that's the first layer. Once you get past that hurdle, you move on to the next check, which is this person really who they claim to be? Because you don't want to get into a situation where you have third-party fraud. This goes back to the class, what people think of as identity theft. I've taken your information, Joel, because I either Googled enough about you or I stole your mail or something. That impersonation fraud still happens. So we have models that predict third-party fraud. We have a model that can tell you if we believe that this is an impersonation. We also have a model that will predict synthetic fraud. And synthetic fraud is a really fast-growing area of fraud losses, which is hard to catch because these synthetic profiles look like either thin file applicants or they look great. They have established credit profiles,
and they've been cultivated out of nothing. So it's not like you have a victim on the other end of the transaction that you're using this identity. They've created this out of nothing. So you are not going to get a complaint from somebody saying somebody's going out opening up credit cards in my name.
Mm-hmm. Yeah, and that's what the current system depends on. Like the ecosystem depends on there being a victim, right? Yeah. There being someone who's raised their hand and saying, "Hey, I didn't set up this loan," but because the synthetic identity doesn't exist, and the person who is actuating that identity, like their intent is to create more accounts and then eventually create a credit loss, it makes it very hard to detect. And because these synthetic identities often interact with other synthetic identities, either through money mule activities or through sharing trade lines, you start to breed them and seed them to the point where you could have a vast number of these already in the ecosystem. And that's part of what Socure is solving for uniquely in the market, is having a model tuned to synthetic attacks, looking at situations where when we take a holistic view of the identity and we're linking and we're layering different signals, we've created predictors to say, hey, this fits a profile of a synthetic attack that we've seen at another customer, which is an important part of something I haven't mentioned about those two models for our third-party synthetic or third-party and synthetic models are built on the feedback of some of the largest clients in the space. They share that with us, and then we build our models. So it's this consortium effect where if one client has experienced a certain level of fraud and a different client is in the Socure ecosystem, we're thwarting that fraud for them.
That's great. I always love taking, all the masses of data, because it's mutually beneficial and it's helpful to all the companies that participate. I mean, we're already doing it for the basis of credit anyway, right? I mean, that's kind of, you're not required to, but we tend to do so. Look, there's companies that I'm sure did not report and didn't have the best controls in place. You might have applied for a loan and you didn't perform. And then you came in again to us. And since the trade line was not reported, the underwriter just passes you through. Not knowing, not even realizing that you had already had a loan with us that you defaulted on. And so, that's why we report to the credit bureau. So we have the good data. Everybody can use it, even using it yourself in my example. I think the same thing goes a long way with fraud data and information as well.
Yeah, and it's key to what we're solving for, which is identity risk, because if an identity has broken through at one financial institution, if it works, chances are that fraudster is going to apply it to another, because many of these banks and lenders, they're using similar systems. So once they find that attack vector, they exploit it, and they exploit it at scale. And the interesting thing, and not a lot of people think about this, is these are not what I might call a mom and pop fraudster, a person in their basement just trying to do small ripoffs and maybe buy stuff at Best Buy, et cetera. Like, these are coordinated fraud rings. These are criminal networks that may be in other countries that are recruiting people from top universities to perpetrate these schemes. So it's not a fair fight, right? The fraudsters don't work with regulations. They don't go, oh, well, we can't do this because of Patriot Act, or we can't do this because of the Fair Credit Reporting Act. They have no rules. The banks, the lenders, really anyone who's proving identity, they have to follow rules. I mean, there's consequences to doing things like not providing adverse action reasons, or potentially having scenarios of discrimination. So you have to be very thoughtful and thorough in what you do. Fraudsters don't care about any of that. So it makes it really challenging. So those are the two beginning elements. And then another thing I'd add that I think is of growing importance in lending, which has mostly been around, let's say DDA accounts, savings accounts, is this process of watchlist screening. being able to make sure that the person you're establishing business is not on some terrorist list, or maybe they're a politically exposed person, or maybe there's been adverse media, like people's names get brought through mass publications, sometimes with great personal details. Those individuals become targets for identity impersonation because now they're out there, right? And so being able to track that, I doubt most lenders are paying attention to the press as they're underwriting. Oh, is this name fits some major news story that broke? And so that's an important part of the process as well, is ensuring that you're screening for those scenarios of exposure.
That's interesting, but it's also kind of scary because it reminds me of like the social score that they have over in China. I don't know if you ever tracked that, but they have that instead of, at least how I understand it. I don't know how true it is. It might just be a bunch of fake news, but they said, they have these social scores, and that's basically your credit report over there. But the government is really the one that's controlling the algorithm.
Well, I've heard about that. I'm a fan of the Netflix series Black Mirror. I think they have this dystopian views of the world, and there's a episode about that where every interaction is scored between individuals, and then your social score limits you and what you can do. And what I think was really interesting and fascinating about that is our credit ecosystem is not too different than that. It's driven more by financials, but it can be very punitive, right? If let's say tell you a story. When I turned 18, the first thing I wanted to do is establish credit. I applied for a Target card, then filed denied. At least that created an inquiry. I existed, I think, at that point. I applied for a credit card with another big company, $250 limit. I was thrilled. Like, I had a credit card. I was starting. Then I think a month or two later, I applied with a top bank. They gave me a $5,000 credit card, and I'm 18. And it's like from denied to a card on his name.
That must have been MBNA. Back in the day, MBNA, all those Delaware guys. I mean, they were. I could have gotten $100,000 credit card at that age. After I established, I got a couple credit cards. I got one from MBNA. I think it was a National Wrestling Association branded card. I think there was who the wrestler was on there. It might have been Gang or something. Who knows? But I mean, it was easy, right? Any event you go to, there was somebody there with a table, and they wanted to sell you a credit. They wanted to get you signed up for a credit card.
Well, easy. At that time too, there was a lot of recruiting in universities. So I remember days in college where rows of tables, sign up for a credit card.
Yeah.
But where I'm going with the story is like, so 5,000. What did I do at 18? No, I used it here and there. Suddenly, it's full.
Yeah.
How did I spend $5,000 in a matter of 6 months when I'm barely making over minimum wage at the time? And so I was immediately drowned, right? And then with minimum payments. What I decided to do, and this is not what a lot of people do, is I made sure I kept up with minimums, and I had to choose between sometimes eating food and paying a credit card payment.
Yeah.
And for me, that paid off. I continued to improve my credit, and credit, it's been an important part of my financial livelihood, right? Getting lower interest rates just gets you, lower payments on cars and mortgages, et cetera.
Right.
But there are individuals that don't do that. And so when they're young, they make credit mistakes. They don't know any better. There's not a lot of financial literacy going on in the world, especially not in high school. And so they're stuck with that. Then when they're 22, 23, like, they're dealing with mistakes from when they're still really a kid. And so what do they do? They turn to these sometimes they're legit. They help you get rid of your debt and give you debt relief. But in many cases, they're nefarious, right? Hey, we're gonna help you improve your credit. We're gonna help you get these bad things off your profile.
Right.
And people jump for it because there's no other mechanism other than maybe bankruptcy and exiting the credit ecosystem for a while. So this is where the credit washing schemes that we were talking about came up. This is where these companies are promising miracles, but what they're really doing is exploiting loopholes in the financial system, where they're reporting good debts gone bad as identity theft.
Right. I'm not going to claim this as real debt. right?
Mm-hmm.
Even though they may have opened it, they say, this is not my debt.
Yeah. And they're just signing their name away to that, and people are charging them fees to do that. Sometimes they will try to find individuals that will sell authorized user accounts. Hey, let me get on your Home Depot card, Joel. That way I can help build my credit back up. If that's between family members, maybe that's okay. But when it becomes between perfect strangers, you don't know who you're letting piggyback onto your credit. And maybe these
are right. Isn't that the term, piggybacking?
Piggybacking is used there. I've been sharing trade lines. There's companies that supply trade lines that you can go, and there are like peer-to-peer networks where they'll set you up. For those that think they're doing something altruistic by selling their authorized user account or joining on a trade line, chances are these fraudsters are exploiting that as well. So this is where these synthetic identities can get seeded, because they're piggybacking on a trade line, and they're creating an identity out of nowhere, and they will pay it. They will be good, right? They'll be good users. And then once that relationship's done, you've now created this phantom that can go and get the $100,000 credit line, or get an automotive vehicle through. And this gets into more automated use cases, but the digital transformation that's happening with car buying is amazing for industry that's been fairly static. But that's more exploitation opportunity, because if you're never going into a dealership to make a car purchase, and you're doing these things all remote, like this is a fraudster's dream. You don't have to prove yourself physically. You do it through these digital mechanisms.
I mean, you're right to call out the process change, right? A lot more online, touchless delivery. I don't know if I'm just, this is very non-scientific, but I noticed like these spam fraud calls are really picking up. I mean, everybody wanting to hit me up about my student loan. I don't have any student loans. Yeah. It's delinquent, right? At the IRS, I got a call yesterday from U.S. Customs. Evidently, I'm mailing a great deal of contraband, and their way to deal with it is to call me with a dialer. And if that's going to move the ball, good luck, U.S. Customs, on that one. There's all these like bogus outfits, right? And they're trying to get you to do whatever, go and buy a bunch of Apple, bucks and send them over to me or whatever.
Yeah.
But it really feels to me, Steve, and without getting too far down the rabbit hole, you mentioned people are getting recruited out of college to join clearly criminal situations. When I'm talking to these people that are clearly in an offshore call center, and they know they're not the IRS, and they know they're not U.S. Customs, and they're just doing this anyway. I feel like there's this degradation in terms, people just don't care, or maybe it's because of the great distrust of governments, et cetera. I almost get a sense that people feel justified that they're normalizing this behavior, and they think that this is in fact a job.
Yeah.
And my point there is if that's the case and people feel normalized, then they're going to start waving a flag, and they're going to feel that this is righteous. And it's just going to increase even more and more. And especially when you have foreign governments that are not exactly most cooperative with us in helping us, really nail down where this stuff is coming from. But at least as far as I'm concerned, I think if you want to be effective within a truly online process, you're really going to want to watch your back and keep an eye on things, because to me, it just seems like things are increasing. And I hate to, I don't mean to create a fear factor around it. I'm just saying this has been my observation. It seems like these things are really creeping up.
Yeah. Yeah, I definitely agree. And I've been receiving calls like that for years. And the top telco providers, the big cell phone companies, they've tried to put in spam blockers. For a while, I was getting a lot of the spam likely warnings, and okay, good. Not going to answer that. I've been getting a call every day for the last 3 months about a roofing company. Hey, you qualify for a roofing program. It's like, I call it back. I try to, I'm in the do not call list. It's a different number every single time. And I can't block it. So I think what we're seeing is this democratization of technology, where these companies they're fraud companies, but they set up shop as if they're a technical support firm or a multi-level marketing firm or something. They establish in countries like India, the Philippines, and they are creating employment for individuals there that maybe really don't care. For them, they're like, well, this just seems weird to be doing, but it's legitimate. They have an office. Like they don't feel like
Maybe
they're
they do
suddenly in some
maybe they
gang.
do some legit work in there, right? Maybe it's a combination of some legit
Mhm.
contracts and some bogus contracts.
Yeah, yeah, but they're getting more and more sophisticated with phishing attacks. Are you familiar with phishing and what these individuals do
I
to?
am, but we got to make sure everybody that's listening knows the good definition. So go for it.
Yeah, so phishing generally is when, and it's phishing with a ph. They're phishing for a victim. The most common way they start is by sending emails to try to get you to reply. Sometimes they'll make the emails look like they come from a reputable company. It looks like a PayPal or maybe an Amazon. They want to hook you and get you to do some activity that will eventually benefit them in some way. Either they're going to trick you into muling money, or they're going to trick you into giving them VPN access or remote access to your PC, and they're going to hijack you and say, "Oh, I can fix this virus if you pay me $200." So these phishing attacks have been occurring for years, and they prey on the individuals that are less tech savvy, that are not hip to these schemes. And unfortunately, this becomes younger individuals and older individuals that just don't have the training on it. But as identity information is out on the web, we're seeing spear phishing attacks. Spear phishing is when they're looking at you, Joel, and they're understanding everything about you. They're analyzing where you live. They're going into social media to see who you're connected with. They're mapping you on, maybe it's a whiteboard or a piece of paper or something, but they know everything about you. And so they will attempt to trick you into, maybe it's through a fake Facebook profile that looks like your cousin. And he's, hey, I'm stuck in Tijuana, Joel. Can you send me $50? I need to get across the border. Like, oh, sure. So people do that. And so they're getting more and more aggressive. They're getting more and more sophisticated. So not just worrying about how we prove identity between like a financial institution and a consumer, but how do we prove identity between each other without saying, hey, just call me. Let me verify this is you. That's really, unless you have that conversation, you might get tricked into it, and they make money. Like this is a big industry. Otherwise, they wouldn't set up these operations to perpetrate it.
Or you could just get really, really embarrassed, like that Manti Te'o guy from the Chargers that got. I guess he had a girl that he fell in love with, but on the other end of the computer, it was not a girl. It was like a phony.
Oh yeah, yeah. I think that, what do they call that? I think that's the catfishing. Or that's where it's for romantic purposes. But that happens too. I mean, the whole ecosystem of online dating these days is filled with either fake profiles, people playing tricks on each other, and it's like the integrity of identity is never more important than it is today.
I think we need an Amish president that will just run on a mandate of idle hands or the devil's workshop, because I think we all just need more to do, more constructive stuff to do.
Yeah. Yeah. Well, these fraudsters, these organized criminal networks, like what they're doing with the money is, in many cases, they're funneling it into activities like, hey, the drug trade, or human trafficking, or terrorism. So to them, like, this is what they want to do, right? They have whatever reasons. And then, of course, there are people trying to rip you off that maybe live down the street, that are just trying to get some free money, and that's certainly happening. But it's definitely a problem. And with this last year in the pandemic, we've seen all the press with unemployment, billions of dollars lost to overseas activities of people impersonating individuals. I'm on LinkedIn. Hey, I've just lost my job. People see those messages. Great, I'm going to file for unemployment for Joel before he has a chance to. And then the unemployment agencies, like, they don't have good systems for that as well. So it's
unreal. They give you like a little bank card. So I mean, as long as I have that card and I have the pen, it's not going to.
You got the money. Yeah,
I got the money.
Yeah, imagine getting a tax bill for benefits you never received. Maybe you were still employed the whole time, and you were never in that category. So it's
well, I guess you could say, look, prove to that I actually got the money. I never. Well, I guess you could take it out as cash, and they could be like, well, you took it all out as cash. I don't know, but that's sticky. Steve, you're going to be and thank you for the support of the trade group. You'll be at the National Automotive Finance Association annual conference. It's our 25th anniversary silver celebration. And that's going to be at the end of August through early September in Plano, Texas. Steve, you're going to be joining us on some of our fraud tracks, and we're going to be talking more about stuff like credit washing, et cetera, some of the things that you're very knowledgeable in. Definitely looking forward to having you there. And for folks that want to kind of connect with you, I'm assuming this is definitely going to be released before the conference. If for folks that want to learn more, Steve, or maybe just pick your brain, that's one of the things, folks, that I need to make sure you understand. I've noticed, particularly within the fraud space, and then guys like Steve, I think it comes down to the individual, very open to having conversations, not constantly looking at the clock. Like, these are guys that like to build solutions. And me in sales as well with Nortridge, I've got a couple clients, prospects, one that signed, but the other's a prospect, a couple more, where they're really letting me engineer an entire solution that involves the full scale from the application through the credit evaluation, all the way through servicing. And we have some really cool stuff at Nortridge and some cool extensions, et cetera. But what it gives me is a satisfaction of being able to consult and put a little footprint there. And I think Steve is very much the same, and you owe it to yourself to reach out to Steve. So Steve, if folks need to get a hold of you, or want to kind of pick your brain on some of this stuff, we covered a lot of ground, but what's the best way for folks to kind of reach out to you?
Yeah, absolutely. I think the easiest is through LinkedIn. So just go into the search box there and type Steve Craig, Socure. I mean, those three words should bring up my profile. I could share my email address too, if you put it in the content there. But let's connect at the show. I'm really excited about that. And I recall going to one a few years ago with you, Joel. Yeah. And it was an amazing group of individuals that are all trying to solve similar problems. And it's funny to see really competitors there, right? These are companies that are competing for customers and loans, even car manufacturers and their captive lending arms are there. We all want the same. We want to make sure good customers get access to great financial products and get vehicles and go on with their life. And we want to stop fraud. So there's a higher level purpose here beyond just doing business and making transactions happen. It's to stop the bad guys, because where this money goes is unacceptable. So LinkedIn, email. I think those are the best ways. If you want more information about the company I work at now, just go to Socure.com and check it out. And I'm happy to tell you more.
Yeah, that's great. And Steve, thanks for mentioning that. That was the spirit and the magic behind Fraud Friday. Had just a great deal to do with the great people such as yourself, really open-minded, totally fine having conversations about clients or with clients, with competitors there. Obviously we all adhere to antitrust type stuff, so we're not going to do anything, outside the box. But look, fraud hurts everybody. And, it's kind of a, rising tides raise all the boats type thing. I think we know that. And that's really the basis of, why we're talking today, why you're going to be at the NAF. We're really looking to make sure that we're getting the education out. People understand what's going on. The fact is, the percentage of business that was done completely online today versus the same time, even last year in the middle of the pandemic, I think we have so many more operators that are mobilized and need to think about putting this in line, right? Some kind of fraud detection, some kind of fraud evaluation, putting it in line with that process, particularly if they've really stepped away from the old touch and feel paper cut style of underwriting, where you really are poring over everything and you've got about 4 different ways to audit every single piece of information. If you really want to automate this stuff, there are ways to do it where you can grab even greater value, right? When you think about grabbing consortium related statistics versus just my own, right? Because I'm going to impose bias, right? Through how I market. If I market only in Latino markets and in Spanish, I'm going to get that clientele, right? So, if I never say anything in Spanish and I have no Spanish people on my floor, I'm probably not going to be, really utilized by the folks that deal with the Spanish speaking clientele. So anyway, point is I love Steve. I love having you on. I can't wait until we get to the NAF conference. And Yeah, let me let you get the last word. I mean, for the conference,
Yeah.
we're going to talk a little bit about credit washing, et cetera. Anything you kind of want to throw in as a closing thought or comment,
Yeah.
fraud related or conference?
Most definitely. And I touched on this earlier, is to really think about credit risk and identity risk as two different problems to solve, right? The identity risk typically in lending is looked at last, right? These are the stipulations, these are the conditions. Let's just prove who this person is. But look at that up front and do that either in parallel with the credit process or ahead of the credit process. So you make sure this person really exists, make sure it's the person they claim to be, make sure you can do business with this person. And if you need to take it to the extreme of having them take a picture of their identity document and a selfie, do that in a way where the friction of the transaction matches with the consumer expectation. And this is new to automotive. And I've talked with a lot of people in the space. It's like, well, we don't really have a fraud problem with that. People are misrepresenting information. It's more first party. No, chances are you have synthetics on your books.
Yeah.
Chances are someone has impersonated, got the car, took the car over the border, or sold it before you could figure it all out. So just that would be my final point, is like, think about those differently. Let's have the dialogue in Texas at the conference, and let's figure out how to solve it.
Outstanding. Thanks, Steve Craig of Socure. Thank you so much for being on the pod today.
Yeah, I appreciate it. Have a great day.